Market conditions, majority bullish. S&P futures relatively flat. They were down about 0.25% earlier, seeing a little bit of a recovery as of right now. Upper end of the range, majority bullish across the board. We've had a little bit of a topping tail bar yesterday, a little bit of a rejection around those highs. We'll see if we pull back and retrace. We've got pivot points at 6,600. The bottom end of that demand block around 65.30. The upper end of the next demand block is around 63.70, and then the 236 is 63.02. So this entire playground range all the way back to the 236 is still bullish momentum if we do get some retracement, and we'll watch to see that first demand location to see if that ends up creating additional demand, or if there is demand sitting right here at this 6600 if we do pull back that far, or if we've already found enough demand to push us through to new highs. We'll see. Still a couple of things regarding breadth of the market. We're seeing the number of stocks above the 50-day moving average on the S&P 500 at 55%. So we saw that dip back down, pull back up, but it's still got a bearish tone, majority bearish. Compression on the trend itself as well. That's really one of the things. We already know that's the case, that the Mag 7, the major tech names, the Microsofts, Googles, Metas, Teslas, those companies are controlling the overall trend of the market currently, and not all stocks are participating. This is a good representation of that here. We're seeing VIX sitting 1646 this morning, majority bearish still, but starting to trend up just a little bit here towards the bottom end of that range. Again, it should be opposite of the market, so we're seeing VIX moving this direction. We're seeing market kind of topping or pausing just a little bit. So you're not seeing that a lot in the S&P, but you are seeing that in VIX starting to climb slightly right here. So you're getting just some added volatility or potential selling, elevated extrinsic value in S&P 500 put options, and that means that somebody's buying more and more put options at these levels just for additional protection. And that doesn't necessarily mean it's going to roll over at this point, but it's something to be paying attention to, particularly where we have breadth here and we have markets at all-time highs. Let's see if there's any other clues here. That we've got S&P 500 closing out at 14.0 yesterday. Dow Jones 14.0 as well. Pretty constructive looking consolidation, not real whippy, not a real big uptrend and downtrend. So it's pretty organized as of right now in terms of consolidation. We're seeing triple Qs moving higher here as well, and that could grab an all-time high if we get a little bit higher move here on triple Qs. Majority bullish across the board on all of these indices. We're seeing Russell 2000 pulling back into that demand block and getting some demand there the last couple of days at least. A flattening trend towards the upper end of the range. 14.0 on trends for both the daily and the weekly on Russell. We've seen oil pull back yesterday. This thing's been all over the place, but it tagged the bottom side of that 236. Pulling back to 382. So we'll see if this becomes a demand location, if this range 78.17 to 74.82 becomes the playground for oil currently, or if we slide all the way back to 72. Pretty volatile, majority bullish still on oil. Gold, 1.5% yesterday, nice gap higher. A fanned out trend on the trend condition indicator, also seeing that on the weekly time frame, and still continuing this overall uptrend. We talked about this current trend structure. If we were to just take one of these lows right here and see where might we pull back to, we could pull back to 340. That becomes the 236 demand location for this current trend here. And again, still bullish, still an uptrend. Certainly extended. Any retracement areas would still be considered bullish unless we really got a big downturn. But be aware of where we're at in this trend. These typically don't end well, or at least they the really slow, drawn-out process. If you look at this chart pattern, really long consolidation, really powerful breakout since that consolidation. This is going back to COVID 2020, and so, but this is where we're at in this trend. It's just an unsustainable move, but we're still seeing just a huge amount of buying coming into this name, and Two-year Treasuries also. See if we touch that 236 location from that swing high. We're grabbing this trend, so it's a downtrend here, and here's the lowest point, 236. So this is bearish momentum still. For the momentum zone works the same to the downside, just like it does the upside. If you have a bearish trend and we're grabbing this direction, counter trend to that 236 is resistance here, and so it's 368. So we could see rates start to pull back, maybe even retest that 350 range on the 2-year. The 10-year, let's see if it's doing the same thing here. It's worked a little bit harder up above 236, 382 could still be a counter trend location. If you look over at these ranges here where price has been before, it's been repelling now, pulling back. We could see 408 on the 10-year. A couple stocks to consider today. We're seeing a nice move on VFF, a good confirmation bar. It's a $3 stock. It's had a nice move from $1 to 2 or 3 and finding some demand back up into momentum. Also seeing a nice setup on CYTK. We're going to take a trade on that one today. In fact, we've got a nice confirmation bar and increased volume back into momentum. 138 in that list. I've got the new buy list. There's still 27 names in there today. Pharmaceutical, starting to see pharmaceuticals coming alive right here, and those a lot of biotech names coming in there as well. Let's see, aluminum, Alcoa. If it's coming to life here a little bit, pretty volatile stock right there. VFF is really the one to keep an eye on today. That'll do it for today's update. Everyone have a fantastic day today.